So, can a trading strategy be, well, overloaded with indicators and still be simple enough for anyone to use? That's a pretty bold claim, right? But that's exactly what we're digging into today. We're going to break down a system for the IQ option platform that's been described as incredibly powerful. The big question is, does all that complexity actually make things clearer or just create a mess? So, what exactly are all the moving parts in this so-called secret strategy? We're going to pull it apart piece by piece, look at every single component, and figure out how they're supposed to work together to give you one clear, actionable signal. Okay, here's our game plan. First, we'll cover the big idea behind it all. Then, we'll literally build the trading chart from scratch. After that, it's all about the 4 key indicators and the super specific rules of the trade. And finally, we'll see it in action and boil it all down to the final takeaway.
All right, let's kick things off with the basic premise. The whole idea here is that even though this method is packed with a bunch of indicators, it's supposedly designed to be easy enough for just about anyone, from beginners to seasoned traders. The ultimate goal? To get really clear signals by having everything work together.
At its core, the strategy is built on this belief that if you take 4 different technical indicators and get them to work in sync, they can cut through all the market noise. It's really all about getting these tools to point in the same direction, giving you a much stronger confirmation before you make a move. Okay, enough with the theory, let's get practical. It's time to actually build the trading chart. And this part is absolutely crucial. You have to get the setup right, because every single thing we talk about next, every indicator, every signal, depends on this exact foundation. So the setup is basically a 6-step process. First things first, we set the time frames. Then we start adding our tools, the 4 indicators. We've got 2 moving averages for tracking the trend, a parabolic SAR, which helps spot when a trend might be flipping, and a force index to see how much oomph is behind a price move. And here are the nitty-gritty details for those time settings. This strategy uses a really fast-paced chart. We're talking 15-second candlesticks, and each trade you make is set to expire in just 1 minute. So yeah, this is definitely a short-term, high-frequency kind of approach. Okay, now we're getting to the real engine room of this whole strategy, the 4 indicators. Think of them as a team. Each one has a very specific job to do. Whether it's spotting momentum or confirming the trend's direction, the key is they all have to agree. So here are the exact settings you'll need to plug in. For the moving averages, we've got 2 of them. Both are simple moving averages. The first, a fast one, is set to a period of 6. The second, a slower one, is at 13. This pair is what helps you spot those quick shifts in momentum. Then you've got the force index, also set to a period of 6 to keep it snappy. And for the parabolic SAR, just leave it on the default settings. These are the exact numbers from the source, so no guesswork needed. All right, our chart is set up and ready to go. Now we get to the most important part, the actual rules of the trade. This is all about knowing exactly what signals to look for. The strategy lays out a really clear checklist of conditions that have to be met before you even think about placing an up or a down trade. Basically, you're looking for a 3-part confirmation. It's like a checklist. For an up trade or a call, here's what you need. 1, the force index has to be above its center line showing buying pressure. 2, the parabolic SAR dots have to be below the price candles, confirming an uptrend. And 3, the final trigger, the fast yellow moving average has to cross above the slow blue one. For a down trade or a put, you just flip every single one of those rules. It has to be the exact opposite. But wait, there's a little more to it than that. The source points out a few things that make a signal even stronger. For instance, with the force index, if that line has been hanging out above or below the center for a little while, that's a better sign. Same with the parabolic SAR. If you see 4 or more dots, that suggests a more established trend. And here's a really key point. That moving average crossover, it's the last piece of the puzzle. It only counts after the parabolic SAR has already confirmed which way the trend is going. And this quote from the creator really sums up that idea perfectly. With some strategies, you're looking for a brand new signal, but not here. In this case, a more developed pattern from the SAR dots suggests the trend isn't just starting, it has real momentum. It's considered a more reliable sign. So we've got the theory, we've got the rules. Now for the fun part. Let's see how this whole thing actually works in a real-world scenario using the examples from the source material itself. And here we go. This is that moment of decision. The creator spots what they think is a prime opportunity, and they call it out, saying the force index is giving a strong signal. Remember, that's checkbox number 1.
And the trade size for this example, as shown in the video, it was $3,000. So that definitely shows a high level of confidence in the signal that all those indicators were giving. So what were the results from that session? Well, according to the creator's video, they took 4 trades and they recorded 4 wins. This chart here just summarizes the perfect outcome they presented in their demonstration. Okay, let's start to wrap this up. We're going to summarize the key pieces of this puzzle, and I want to highlight one last super important rule that the creator says is absolutely essential to getting this right. And here it is, a really crucial rule about timing. The position of the force index. It only matters at the exact second you open the trade. It has to be above or below that center line right then. If it crosses back over a moment after your trade is already open, that's okay. According to the strategy, the trade is still valid. So to put a bow on all of this, let's just recap the 4 confirmations one last time. Step 1, the force index tells you which way the momentum is flowing. Step 2, the parabolic SAR confirms the overall trend direction. Step 3, the number of those SAR dots tells you how strong that trend is. And finally, step 4, the moving average crossover is your entry signal, your final green light. And that really brings us to the final big question, doesn't it? We've just walked through a strategy that's intentionally overloaded with indicators, all in the name of creating a clear signal. It really makes you think. When it comes to trading, where does the real power lie? Is it in the complexity of the strategy itself, or is it in the simple, consistent, disciplined way that a trader follows their rules?